Welcome to Form 3300, Performing Risk Assessment. The first step in the RSM audit risk model is assessing whether a class of transactions, account balance, or disclosure is significant. Significance is based on quantitative and qualitative factors. Form 3300 automatically generates a checkmark in the significance assessment column if the financial statement balance is greater than performance materiality. However, remember that in accordance with GAM US, significance is assessed in relation to overall materiality. For any balances greater than overall materiality, the significance assessment should not be overridden. This doesn't necessarily mean that you will have to perform extensive testing on the balance, as you will still determine relevant assertions and tailor the audit program. See the video on planning a risk response for more information. If a financial statement balance is between performance materiality and overall materiality, you may override the significance determination based on any relevant qualitative factors. This may also be necessary to address significance when the financial statement area, as shown on Form 3300, does not exactly align with the presentation in the financial statements. To override the automatic assessment, manually uncheck the box. A red dot will appear where the automatic quantitative assessment is overridden. Financial statement balances that are not quantitatively significant must be assessed for qualitative factors as well. For example, accrued expenses may be insignificant in amount, but there is a possibility for material misstatement due to potential unrecorded liabilities. In this case, the significance box should be manually checked. A red dot will appear because the automatic assessment was overridden. The comments column should be used to document the qualitative factors. The next step in the RSM audit risk model is to identify relevant assertions and assess whether the inherent risk of each one is significant or non-significant. Assertions are shown in the relevant assertions column of Form 3300. For default lead codes in RSM ORB, all assertions are pre-populated for balance sheet lead codes. For income statement lead codes, all assertions except rights and obligations are pre-populated. If new lead codes are added, all assertions are pre-populated. If an assertion is not relevant or applicable to a financial statement area, the assertion should be removed from the relevant assertion listing. To remove the assertion, right-click on the line item and select Change Assertions. Uncheck any assertion that is deemed not relevant to that audit area, and then click OK. It is imperative to remove assertions that are not relevant because this is what drives the optimization of the audit programs linked to the audit area. Procedures that are only associated with assertions not deemed relevant are removed from the audit program. It is not necessary to remove assertions for financial statement areas that are not significant. The optimizer will automatically delete audit programs associated with these areas. By clicking on the plus sign to the left of the group number, the assertions expand so that each one is on a separate line and a risk response can be planned. We will return to the risk response columns in the video on planning a risk response. The SIG risk column displays financial statement level risks or significant risks that have been added throughout the audit and that have been linked to that financial statement area and assertion. Financial statement level risks appear at the top of the table. This file has a financial statement level risk relating to management override of controls, which you can see when you hover over the number. There is also a significant risk related to revenue. More specifically, the revenue significant risk is related to completeness and cutoff. This indicates our assessment of high inherent risk for completeness and cutoff. The other relevant assertions that do not have a significant risk attached are assessed as non-significant risks. Once all significance assessments are complete and relevant assertions have been determined, return to the Optimizer Confirmation Report, which is work paper 0101 in the Setup folder. Review the items proposed for deletion in the FSA Assessment section of the checklist. After review, click the Proceed with Deletion button at the bottom of the checklist. This will remove the audit programs, lead sheets, and supporting work papers in any financial statement area that was determined to be not significant. You are now ready to return to Form 3300 and prepare a risk response for all significant areas.